Hope you can see my screen. Yeah, so, as I was saying, when the market is moving downwards like this, it's very hard for you to put the market in perspective. Putting the market in perspective is breaking it down so that you're able to understand what's going on. Although, despite you knowing that this is a downtrend, you're not going to know anything else. So, putting it in perspective is doing an analysis, adding either trend lines, support, resistance levels, all those key levels, so that whatever is happening or whatever the market is doing, you are able to now like see it tangibly instead of just thinking theoretically that the market is going down, and then you don't really have a perspective of where you can even enter from. Like there's nothing else that you know other than just understanding that the market is going down. So that's what putting the market in perspective is. So then the bias is simply the direction to which you strongly believe the market is going based on market structure. This one we've already agreed that it's a downtrend. So the first thing you want to do is you want to mark the most obvious point after you have changed the candles to the line chart. You want to mark the most obvious levels to you. So then you keep on adjusting this until it has the most number of touches. So then you can do it like that. If I want, I can even extend it all the way there. The next thing you want to do is bring another trend line down. Now you want to touch those. You want to ensure that when you adjust it, you only leave out uh, points which were very extreme. For instance, there was this level, you're not going to consider this. Why? Because if I was to draw a line touching this, if I was to draw that, you'll notice that it will have fewer touches. Maybe it only touch this point and this one here. And this point there. So you want to avoid this. Why? Because the more a line has been touched, the stronger that level is. In short, the number of touches are in direct proportion to the strength of a given line or support and resistance level or any key level with that regard. The more number of touches it has, the stronger it is. So why I'm saying avoid these extreme lines, because they'll give you fewer number of touches, meaning whatever level that you're going to draw with them, it won't be as strong. So that's why we've ignored also, in case you might be wondering, we've also ignored these two here, this one and this one. Because if I was to draw a trend line touching these levels, it will probably have fewer touches than the one I've drawn now. Because if I try to make it touch those two, you'll notice that if I was to leave this as a trend line, you'll notice that it has fewer touches. It only has this one and these two here. So that's a weak trend line. So what you want to do with your trend lines, you always want to make sure that you put it at a position where it's touching the topmost points of the lines like that. You can see all the way here and there. It's touching the tips. But again, it's on a level where it has the most number of touches possible. Once you're done with that, you found your bias. The next thing you want to do is move to a lower time frame, like the 1 hour. Now on the 1 hour, you just want to retrieve, like you zoom out a little bit.
Apologies, maybe before you proceed.
Uh-huh.
Before you proceed. Yes. You say these lines are drawn to determine your biasness.
No, the bias, you can determine it without the trend lines. Just by looking at a chart, you're able to tell the direction, but they help you to be assured, to rest assured that that direction is correct, because they'll put the market in a better perspective like this. But even without them,
Oh, okay, I see.
yeah, even without them, let's say I go back to this. Yeah, 4 hours. Then let me hide the line. You're able to see that this is moving downwards, right?
Yes, yes, yes.
Yes, even without the trend lines, yeah. So that's what I was explaining. They just help you to put the market in.
Maybe to be sure.
Yes, yes. Help you be sure, yeah.
Oh,
Like that, you are now
no,
just
okay.
going to say, okay, this is definitely a downtrend.
No, yeah. Then on the issue of picking on the edges where the train line has to touch.
Uh-huh.
How does that help?
Okay, so
You said there's where, maybe for example, there's some edges, where when you
there,
draw a trend line passing through it or touching it, it is going to have fewer touches. But
uh-huh.
also in other edges, where if maybe you have to draw a trend line, which will touch it, it is going to have more touches.
Mm-hmm. Yes, what you've just said is exactly what you do. You just look at, let me remove that for now and get just exactly what you've said. Let me get this. Let's say we have this moving down. Then it makes this minor trend line. It makes that minor retracement. Then there's this. Then another minor one. Then this one is just a full
Hello?
wave going like that. Like that. Yeah. So then what I meant was, when drawing your trend line, you're not going to consider, you're seeing this, that you're seeing these minor levels in between these ones. You're not going to consider any of these smaller ones. You're not going to consider any of those. When drawing your trend line, you only focus on the most obvious levels. Like in
Oh,
this
okay, I
case,
see.
yes, like those big ones, yes. Like for instance, in this case, I only pick this and that one. This one can be ignored. Why? Because it's not an obvious level. It's like it's very small. It's minor, meaning it's more inside than it is outward.
Yes, outward,
Yes.
yes, I see.
So
Okay.
if I was to push it here, this would also be
Mm-hmm.
correct. It's also a trend line. It's correct. But then
Mm-hmm.
it won't help you much because the points that you've picked are inward. This point,
Okay, I see.
it's
Mm-hmm.
too much inside. So you want to pick the ones which are
Yes.
outside. Yeah.
Okay, okay, I see, I see, I see.
Yeah. So then if I remove this, also similar to what's going on here. You've seen I was only picking points. You can see this level here. Those are outwards. I wasn't picking these ones
Mm-hmm.
inside, like this one and that one. There are also levels, but I won't consider them. I only pick the most obvious ones to me. meaning the ones which are protruding more than the others.
Yes.
But
And the
again,
others, oh,
you
okay.
just need to, yeah, you just need to balance it with the fact that these ones which go to the extreme, like that one, you just ignore them.
Mm-hmm.
Yes. You just ignore that one and maintain the ones that are most obvious and a point which
Obvious.
has the most number of touches. Yeah.
Okay. Okay.
All right. Yeah.
Okay. So from okay, so from here now, after
After this,
now identifying. Mm-hmm.
after identifying that, what you want to do is change your time frame to 1 hour. Now on the 1 hour, you'll be able to see a little bit more than on the 4 hours. Remember what I said when you're drawing, since here, what you want to do on the 1 hour, you just want to put in support and resistance levels. Now for a downtrend,
Okay, in the next 1 hour.
yes, on the 1 hour. Now for this one, I said specifically you want to do. So how do you know where exactly you are going to put those resistance levels? If you watch the previous video, you probably understand. But just for the sake of learning, I've said only the
We are saying
points.
that how am I going to know the next resistance level?
Yes. So how you are going to know?
Maybe to. Mm-hmm.
How you are going to know? It's very simple. What you do is in this lower support level, this line here, this lower dynamic line,
Mm-hmm.
you're just going to mark out
Mm-hmm.
all the points where the market has touched that line. So there's this point here. There's also this point. You're going to ignore these two smaller ones inside. Like this one here,
Yeah.
this one. You ignore those ones. You only mark out the points where the market had touched this level.
The trend line.
Yes, the trend line.
Mm-hmm.
So you also have this one here. You can also, if you want, you can also have this one, but they are almost at the same point with that other one. I can also see that once
Yeah.
I've marked out those ones, what I want to do now is to get a triangle. From that point, extend it to the right. Does that make sense?
Okay. Yes.
Let me just. Okay, so I want to put a triangle on those levels that I've marked.
Mm-hmm.
Extend that to the right. So this has covered these two. So we move on to the next one, which is this point here. We want to just extend this to the right. The next one is this one. I just want to extend this to the right. Since it's an area, it has to be slightly big. That's just those levels, yeah. So once you're done with this, you're able to identify those, you are done on this time frame. The next thing you want to do is
Yeah.
shift to the 1 hour or to the 15 minutes. Now here, you're going to convert back, you're going to change, in short, you're going to change the line chart into a candlestick chart. Then the next thing you would want to do is reduce. The other thing you would want to do now is reduce these levels. But if you don't want, you can maintain them the way they are. But if you'd like, you can just keep reducing or extending them so that they've touched these precise points that you're looking at. So let me just Okay, yeah. So once you're done with this, once you're done with that, the next thing is we've analyzed, we know that our bias is the market is going down.
Yes.
Also found the support and resistance levels. The next thing I want to do is to enter the market and take a trade. Now, how am I going to know where to enter from? So what's going to happen is, let's start from the beginning, say from here. So what I want to do is, I want to wait for the market to break this green line, this green zone. Then it moves all the way to here, right? The next thing I want to do is wait for it to push back up to that green level. Does that make sense?
Yes, yes.
Once it reaches this green zone, what I want to do is I want to zoom in. I'll no longer now need to see the bigger picture. I'll just need to see how is the market reacting on this level. How is the market reacting there? So then everything that you've been doing so far, it has just pointed to the fact that this market is going to go down. How did I know that the market is going to go down? Since on the higher time frame, remember our bias has been the market based on market structure is telling us that it's going down. On the 1 hour, yes, on the 1 hour, we're looking at the key resistance levels. Resistance levels and support levels, these will always be broken and retested. Does that make sense? Let me go back to the 1 hour. Yes. So this level, let me go back a little bit further. We can see that the market came here, moved all the way from there, it pushed back up. In short, this was a support level. Then what happened? The market broke this level. So the market breaks this level. Then it comes back for this minor retest, this one. It goes further down.
So the top green line is the resistance.
Yes.
Resistance line.
Yes.
Okay, then the bottom one is the support.
Yes. It was support before, but now it has become resistance. Once the market has broken it, it becomes a resistance level. Now, with that understanding, let's now go back to the 15 minutes. What I want to do is, let me zoom in a little bit. So we are here. Now this makes sense. We are on this circle. What I want to do here, I just want to zoom in. Since I already know where the market is going to go, I have a bias that this market is going to go down. So what do I want to see? I want to see candlesticks that give me that confirmation now that indeed the market is going down. Where do I get them? You can see there's a strong bullish candle here which enters this green zone. Once it does, what's the next candle that follows immediately? It's a doji. You can see this, it's a doji or a ham. Now, what do dojis tell us? Dojis tell us that the momentum has shifted, because if the market is going to continue going in a specific direction, it doesn't need to print small candles, because smaller candles tell us that there's momentum shift. In short, there's big opposing pressure that's making the body of the candle to be small. Yeah. So once now you put everything together, what you want to do is, in this time frame, you just want to look at the lowest point the market had gone on this other side, or where it started from, which is this green zone here. Then you enter the market, immediately where you can see, like for instance, this point here. Then you put your stop loss just right above that. Then you drag this all the way down to you drag this down all the way to this green level here. Then we know for a fact that this market is going to move all the way to that level there. How would I have known that it was going to move to that point? So remember, I've done a lot of analysis on different time frames. Then where I'm going to exactly enter will be that point there. Why? Because I've seen that after this big bullish candle, the next two were dodges. Now dodges just represent momentum shift, but these are not going to convince me that there is enough selling pressure. So I'm going to wait for a candle which has a very small wick pointed downwards. Does that make sense? Because buyers will always be pushing the market upwards, meaning if they are, despite the candle being either black or white, if there's a lot of buyers pushing the market, the candle will always have a longer wick on the bottom. Does that make sense? Like these two here, these two dodges, these were showing that buyers still had a lot of pressure trying to push the market upwards, because the sellers are tried to move them down to these points, extreme points, but the buyers kept on pushing them back up. So the next candle, you can see this other one. It's fairly good because the wick that it has on the bottom, it's the same as on the top part there. Now, since I've seen that this is showing somehow an equal pressure in between, I won't be fully convinced to enter from there. But on this other candle, this one which follows, this next one, I'm going to enter. Why? For two reasons. Because this candle has one, a very big body compared to these three. Then the second one is it has a small wick on both sides. It has a smaller wick on both sides compared to these three. So this now gives me further confirmation that the market is going to go down. Hence, I enter from there. I put my stop loss just above the highest point, just there. Then I take a sell trade. Once I just enter from here, I stop looking at the market. I can go on to do my own things. Then just wait for the market to play out according to my bias. So now this means you have to really understand trend lines. You have to understand market structure. You have to understand candlestick patterns. You have to understand the top-down analysis. You have to understand support and resistance. You need to understand breaks and retests. So now you put everything together to come up with a trade. Hope that makes sense. Is that okay?
Yes, it is.
Okay. Yeah, so that was today's lesson. If you want to learn more on this, what you can do is I'll share the videos with you on your emails. Then what you want to do is just practice. Open a blank chart, something that you like. You can also use Euro USD. Once you have Euro USD or any other pair that you want to trade, you can open any chart. Then what you want to do is go to the 4 hours time frame, remove the candles, leave line charts, then try to identify areas where the market is trending. Once you're able to spot the trend, that's the first thing that you have, known as your bias. overall the trend is going downwards. The next thing you want to identify in the 1 hour is the support and resistance levels. Once you identify the support and resistance levels, you want to move to the 15 minutes and find the entry points. Now, the entry points just means, or entry criteria that you use will just be the candlestick patterns. So in our case, if this market here never formed any of these black candles you're seeing here, it just simply means we'll just leave it. We're not going to take the trade. We haven't seen any ideal setup, so we just leave it. If the market breaks, it keeps on maybe printing white candles and they break this level, we are not going, we're not going to enter the market. We'll just leave it. We are only going to enter the market if it aligns with everything that we've anticipated already. Yes. Once it meets those anticipations, we're going to end. If it doesn't meet them, we just leave the market without putting any trades. So this is the top-down analysis. Yeah. So then rewatch these videos and just try to practice. The next thing I wanted us to do was I have another meeting. So all right. Do you have any questions on this? You probably watch the videos. If you have any questions, you can ask afterwards.
All right, I'll definitely do that.
Yeah. Then I wanted us to also look at. Let me just stop sharing this. I also wanted us to look at the MT5 phone interface. Or maybe I should just share a video which explains how to use it. But let me see, I want to find the picture which has. Okay, yeah. I think we can look at this. Okay, so what I want to do is. All right, so let me share. Let me just share my screen. So let's see. Hope you can see my screen.
Yes, I am.
Okay. So then on your MetaTrader interface, it looks something like this, right? So what you want to do is the only thing that's important is this point here, this here. Now, before you can click sell
Which one? Which one?
or buy,
Oh,
you're not able to see.
I can see the screens, but where you are pointing, where you are
Oh, it's
saying
this one
what the
here.
most important.
This one. I'm saying the sale. It's this one here. You're able to see them, right?
Okay.
White
Yeah,
written
yeah,
sale
yeah.
and
Oh, yeah.
those ones. So now I was saying, before you can fill the order, meaning when you
Written.
click here, sorry,
I'm not able to see where you are pointing.
okay. Can you see this pen like
Car?
that I'm hovering around the pen? Yes,
Take a what?
take a pen, this one rating the screen.
Oh, I see. Where I've marked
Yes.
on the
Now,
top right.
yes, key. Let me just draw arrows so that they point out, you see, this point and this one.
On the top right.
Yes.
On the top right. Okay. Mm-hmm.
Yeah, so what I'm saying now is before you click on any of these, either this sell or buy, what you want to do
Mm-hmm.
is change the lot size, this. Now, changing the
Mm-hmm.
lot size has to be in alignment with the capital that you have. So before you can click either buy or sell, because once you click on those, it means you filled the order. So that means if you filled it at a very high price, you can instantly lose your account. So what you want to do is change this to a lot size that suits your account. For instance, if you have anything less than $25, the lot size that you're supposed to use should be 0.01. Then for
Okay.
someone, yes, then for someone with maybe more, like let's say they have 50 or something like that, 50 or more, they can use 0.03. Then for someone with 100 and above, this keeps on increasing just like that. So that's the only important thing I
Okay.
wanted to explain. Then the other thing is,
Mm-hmm.
before you can come to these things here, you have to, since it will have this interface here, where it will have like currencies and it will have a list like that. So now on this list, what you want to do is you click on the currency pair that you want to trade specifically. So let's say if we had the trade for Australian dollar, this is the United States dollar. What I want to do is I'll click on this. It will look something like this. You're seeing this other screen here. It will look something like
Yes.
it will look something like that. So it will have quotes here, all these quotes. You don't want to pay attention to this. It doesn't really matter. What you want to do is click on this. Once you click on this will take you straight to this interface here. So what you first want to pay attention to is this number here. The number that's there.
Okay.
You change it to depending with your account. If it's smaller than 25, you can use that. If it's bigger than 50, you can use 0.03. Then if it's 100 and above, you can use 0.06. So once you change that number, then you click on the button which is in alignment with what your bias is. So for instance, if we know that our bias is sell, we shouldn't come press buy here because it means you just lose out on the money that you are supposed to make because you've opened a wrong or you filled in a wrong order. So you pay attention also to what you fill in. So if it's a buy, you
As a
come and
buyer.
buy. If it's a sell, you come and sell. But before you can sell or buy, change that number to suit the capital that you have. Once you do all that, it will take you now this middle interface. It will bring
Okay.
you this one. Let me see if I can use. Okay, yeah, I can use this. It will bring you to this one here. Hope you can see. I
Yes,
don't
I'm
know
able to
why.
see.
I don't know why this is not working.
You don't know why?
This the pen I'm using for annotating is not. Okay, let me pick it from here. Yeah, this. So it will bring this interface, this one.
Mm-hmm.
Now, what's going to be happening will be once you just enter the market, your balance it will show negative. So let's say I have $30 in my account. The moment I just enter any
Mm-hmm.
trade, the mark the prices here they will show red.
For sure.
They will show it in red. Why is that? Because once you just enter the market, the brokers don't trust that you make money from your trades because a lot of traders lose
Okay.
money because they don't understand these concepts. So the brokers, instead of them being paid when you make money, they get their money in advance. You
Oh,
understand,
I
right?
see. Oh,
So like if they charge, for instance, but the amounts that they charge are very, very small. They get cents, like maybe
mm-hmm.
0.0 something cents. So they get it
Mm-hmm.
in advance. Whether in a trade you're going to win or lose, they already get their fee in advance. So that's why
Okay.
whenever you just open a trade, any trade, whether it's being a demo account, whatever it is, to always start in negatives. Then once it starts in negatives, the moment the market now pushes to your direction, it now changes to blue. It will now show in blue. Then closing that
Okay.
trade is very easy. You just swipe this number, the profit that you can see, you swipe is going to the right, no left. You push, it's like on your screen, you just swipe this number, putting it to the left, then it will show you where you can close the trade. Or since we will have like profit targets, you don't need to close it manually. To close automatically when the prices reaches our intended targets. But in case almost reaches our price and starts going in the opposite direction, you have to close it manually. So closing it manually is easy. What you just do is swipe the price, this value, to the left. Once you do, it will bring somewhere where it will show you like a small window where it will show you what you want to do. If you want to close the trade, if you want to change the stop losses, if you want to do all that. So you can practice that on a demo account for Xness. Or even
Okay.
on your live account, don't just press any sell or buy. You can just,
Mm-hmm.
oh, no, it won't bring this unless you're in a live trade. Yeah, this is hard to teach
Okay.
because it needs you to be in a live trade. But it's pretty easy. I can
That's
still explain more in our next lesson. But I wanted to explain this just because we might take some trades this week. So